Peter Espig. How are you?
Good. How are you doing?
I'm good, man.
Yeah.
So listen, if you like this interview with Peter, I suggest you join the webinar. The date will be in the description of this video, and I'm looking forward to this one.
Thank you.
Yeah. So you're a director, CEO of Nicola Mining.
Correct.
We're going to get to know who you are, where you grew up, and pretty much everything we can about you, sir.
Well, that's a pretty boring story, but let's go.
All right. Okay, so welcome to Toronto.
Thanks.
Where do you reside now?
Vancouver.
Vancouver.
But I do have season's tickets to the Blue Jays.
Really?
Yeah. Go
Really?
Jays, yeah.
Come on. What? So you're here frequently then?
My wife and I and my family were big Ohtani fans, so we didn't know if he was going to go here to the Dodgers. And
So you're new season ticket holder?
correct. But that
Oh,
said, I would go see 20 games a year anyway, so
Okay.
give them out to friend. But no, I've followed Blue Jays since the 90s.
Yeah, I'm a big baseball guy.
My son was a starting pitcher at Yale.
Oh yeah?
And so we grew up around baseball, and he played baseball he was born in Japan. Both my kids were born in Japan.
Okay. What happened to? So he was a pitcher, and he just kind of like, what happened with his career?
No, he graduated from Yale and just said, I'm going to start a career so he works in private equity.
Okay.
But playing single A, double A is quite a grind.
Yeah.
It's not like the NHL where you've got one minor league there. You've got single A, the rookie league, single A high, double A, triple A.
Yeah.
So I think there's a stat that if you're drafted in the majors as a pitcher, the probability of throwing one pitch in the majors is 1.6%. So
Yes.
yeah.
What was his best pitch? Do you know?
Curveball and
Curveball?
slider. Yeah.
Okay, I'm just gonna adjust my microphone here. Okay, so he had a nasty curveball and a slider. Born in Japan.
Yep.
I thought, you know what? I actually thought we had a really good chance there at Ohtani.
It came down to two teams, and that was Blue Jays and Dodgers.
Yeah, we just couldn't land him, and that's a very creative contract they gave him, eh?
Well, one thing about Ohtani is he's just not driven by money.
Right.
He just wants to win, and which shows a lot of integrity.
Yep. And what a franchise! Unfortunately, it won't be with Toronto, at least unless he gets traded. But what a franchise to go and try to win these World Series with, right?
My dream World Series now is Blue Jays and Dodgers because I've got seasons tickets at both.
Yeah. Oh, really?
Yeah.
That's awesome, man. Okay, so where were you born?
I was born in Vienna, Austria.
Okay.
Yeah. So I'm an immigrant to Canada.
Good old Canadian story.
Yeah.
Were you a good academic? I'm pretty sure you were. Like, did you slack
Yeah.
off because you're so intelligent?
No. Well, probably I did in high school, but in university, I did my undergrad degree in applied mathematics.
Okay.
I actually started out in psychology and realized I liked math more than psychology, and it was easier for me. And then went to Japan played football and taught English in Japan, and then was a Chase and International Scholar at Columbia Business School.
Right.
And that's where I started my Wall Street career.
Okay. Any other sports that you played growing up?
I played hockey, the hockey, soccer, football,
Trifecta.
ran track, so yeah.
Very competitive guy, or?
Yeah.
Okay.
There's a saying, like, the successful people, the most common characteristic of people who are successful in life is they're sore losers.
Right.
It's the most common characteristic of successful people.
I mean, it makes a lot of sense.
Yeah.
Really, when you think about it, it's kind of, you'd almost say it's kind of common sense, but because I mean, that if you take an L, that fuels the ambition and motivation to go and win, and then if you
Yeah.
throw in some discipline in there, then you gotta,
Well, and and being a sore loser, like, it's not like everything is a competition. So I'll give you an example. When I was at Goldman, and somebody would do a presentation or would do a model, a financial model, and I could see that that model was better than anything that I could make.
It bothered you.
It would be like, I've got to pick up my game. And so I was motivated to get to that level. It's not like I felt that I lost to that person.
Yeah.
But
you knew he was better.
I knew he or she was better than me, and it would.
See, I love that, Peter.
And it drove me to like just continue to get better and better. And even now, like, you know, I never stop learning. Like, you know, you've got to learn. The minute you stop learning, your career or your ambitions all halt.
It's done.
And it's done. So
I know. I really respect that. I try to teach that with the kids and all that. Some of it's built inside, but like I remember when I was a baseball player, and I remember when I was around 12 years old, I went to practice, and up until that point, I could hit the ball further than anybody, right? And then there's a couple of guys, and I was trying out for the AAA team, and you know they hit it further and more consistent.
Yeah.
And that was the first time, Peter, that I saw that. And I still remember today, as a 12-year-old boy, how that made me feel. And the guy that would hit the ball further than me became my best friend.
Yeah.
And we would hit balls, we'd had home run derbies, and it was just, that's when I sort of was learning that I was very competitive, right?
Well, and you know, like, but you also have to be realistic. I think one of the problems that I see in sports in Canada, and you would have seen this, is the parents overrate their kids' skill set.
Right.
And so everybody thinks their kid's going to be in the NHL or you know, the Major League or, you know, NBA. So, and the reality is the kids that actually make it are just different.
Right, exactly.
And you see that very young.
Yes, you do.
And I think my kid, Thomas, who was the pitcher at Yale, he understood that. Like he knew that he was good. I mean, he was a very good college player. He was a starting pitcher as a freshman in Div 1 baseball.
Yeah.
But we saw kids that were like first-round draft picks in the MLB, and they were just different.
They were different.
Yeah. And so it's and he's a sore loser. So you know you want to be a sore loser, but you also need to be realistic. And you know, being a sore loser is driving yourself. Like, actually, there's 5 things I always say to people in careers. In a career that makes you happy, you need to like what you're doing. You need to think that you're learning, like you want to continue learning throughout your life. You need to work with people you respect and not like.
Mm-hmm.
When I say respect and not like, of course you want to like them, but respect, if somebody you respect tells you you're doing something wrong, you'll listen to them. But you can like people and still not respect them. Right. They could be buddies or drinking buddies.
Yeah, you're not going to take their advice.
Yeah, and then the 4th thing is that you need to feel that your career still has upside, right? So you want to know that you can get promoted or that there's more upside opportunity in 3 or 5 years. And then the last one, which is the most complex, is you need to get paid what you think you're worth. And sometimes if people are underpaid, they look for different jobs or they'll look for different companies. But if they're overpaid and they're smart enough to realize it, they become very protective of their position. Right. And then they become less a team player.
Yeah, because they don't want other people getting
promoted. Exactly. So those are the 5 things that I always say to young people, you know, to have a successful career. You want to have all 5.
Mm-hmm. Okay, so you played a lot of sports. You're a competitive guy. Do you work out? Do you diet?
I work out. I fast every Monday, once a week. For 24 hours. I don't eat lunch.
Have you done a 3-day fast?
No.
Why not?
Why not? Because I don't want to. Like,
you don't want to?
Yeah.
That's a pretty good answer.
Yeah, like, you know, I fast every Monday.
Just to reset?
Like it started out through our church, and I thought, you know, I'll do it. And surprisingly, 24 hours, there's once where I get a little bit of a ping, drink some water, and then I'm fine.
Yeah. Oh, so you do a legit fast. You don't do a water fast?
I drink water.
Okay.
Yeah.
Got it.
And then, but every day I don't eat lunch.
Okay.
I eat twice a day.
Yeah, so after maybe 2 o'clock or whatever, you start maybe munching on something?
No, I'll have breakfast and dinner.
Oh, you have breakfast?
Yeah.
Okay. All right.
Do you fast?
Yeah. I do intermittent fasting. I try to, I think now this year I'm on pace to do like 3 or 4 a 3-day fast.
Yeah, my son does that. So the baseball player?
Yeah.
He does that. And he says it's great. Like,
I love it, man.
yeah.
It's challenging.
Yeah.
You really get to see what your mental capacity is, and you reach a new level.
Sure.
Right after on the second day, and then that's when you start understanding, how you feel when you're getting these glucose spikes.
Sure.
You understand your body different, and I wish everybody would try it actually, because, like, don't get me wrong, 24-hour fast is good, but it's just different, and I think people should experience that. But
I mean, I'll probably this year I'll try for a 48. I just, it's, to me, it's kind of like a guy, a person who doesn't jog and says, I'm going to run a marathon. Like, I think you got to kind of build your way up to it.
Sure, yeah.
So I can go from, so I do like 52 fasts a year now, and I'll probably do like once a month, I'll do like 12. My goal this year is to do 12, 48-hour fasts.
Okay, yeah.
But 36 is...
yeah, and you know what? It's the more experience you get doing it, it's actually how you break your fast. That's really important too. Having apple cider vinegar, like being easy on the system, right? Like, I have a good stomach, but after 3 days, if I kind of just go hard right away, you get a little bit of an upset stomach. But it just takes all the inflammation out of the body. You ever done keto? Well, probably not.
Yeah.
You've done keto?
Of course.
Right.
Yeah.
So that
Yeah.
for me, I usually do keto between May to the end of September.
Yep.
Because I play a lot of sports,
Yep.
and I love how it gets the inflammation out of the body, and I feel very different. So doing the 3-day fast, obviously your body's creating these ketones. That's kind of the best way for me to go into keto.
Well, it's interesting though, because when you do a fast, like even after 24 hours, you can't eat as much. Like, I've done
Right.
36-hour fasts,
Mm-hmm.
and because I'll hit 24 hours and I'll be like, I'm not even hungry yet,
Right.
and then I'll wait, I'll go to bed and then eat
Yeah.
breakfast, and even then, like, your stomach shrinks that quickly.
That's right.
Like,
yeah,
it's
and
quite amazing.
your appetite kind of goes down.
Yeah,
and all that.
yeah.
Yeah, it's way easier. I know. I see a lot of people that struggle with weight and stuff like that. And I mean, there's, like, I don't fast or do keto because of weight. Like, it's not hard for
Yeah.
me to lose weight, right? I do it for all the other reasons.
It's because you're young.
Yeah, I'm 40. I mean,
Yeah.
I'm getting up there, but
I'm
not-
58.
Okay. Well, you look
So-
great, dude.
Yeah, no, my dad, my dad's in great shape. I remember when my dad was like 73 years old, he was benching 200 pounds a day, 200 times.
How old?
When he was like 73 or 75.
Yeah, that's crazy.
And the doctor said to my dad, like, Mr. Espig, you shouldn't be benching 200 pounds.
Your joints.
You're in your mid-70s, and that's too much. And he would do it 200 times a day.
Wow. I mean,
That was
I would
his
agree with the doctor. Only
Yeah,
just
and
because,
he was
but
like,
it's
son,
not-
like,
get out of here.
son, because we're from Austria. He's like, son, yeah, I think I'm fine. And then my stepmother would be like, well, tell him to slow down, like the doctor says. And I'm like, Dad, you got to slow down.
No chance. That's funny. Okay, I'm glad we talked about that. I mean, listen, the last two gentlemen I had in this vehicle, they both exercised, they're very disciplined individuals. And I want to talk about that stuff because I think it goes, pretty far in a professional career, right?
Sure.
Okay, so you take me out of your academic career into your professional career, right?
Sure.
Where did it all start?
Well, I started my career in Japan. I lived outside of Tokyo in a place in Yamanashi, a province, prefecture called Yamanashi in Kofu, and started a chain of English schools. So I had the largest chain of English schools in the province.
Okay.
And then started a jewelry business. So I had stores and a wholesale business, and everything was going quite well. And I just kind of thought to myself, like, at that time I had an undergrad degree, and I was like, I'd read in the papers, because I would always read the Financial Times and Wall Street Journal, and I thought, I don't want to be selling $300 necklaces. I want to do $300 million transactions. And I knew some bankers, and I felt that quantitatively I was at their level, but I felt...
Your competitive nature?
Yeah, and I felt that, I can do that. And so I applied to Columbia University Business School. I applied to several schools and got accepted to basically all of them, and was decided. Well, actually, I didn't know whether to go to Wharton or Columbia or Duke or Chicago. It came down to those 4 schools, and my wife said, I want to live in New York, so went to Columbia University. I was a international Chazen Scholar there, graduated, and then started my career in finance, and I worked for a bank called Shinsei Bank, which is a subsidiary. It was held by Ripplewood, and Goldman Sachs was a major investor through Christopher Flowers. Worked there, then I went into private equity at Olympus Capital, which is a New York-based private equity fund, and then started working for Goldman Sachs. After Goldman, I left Goldman in 2006 and was one of the pioneers of SPACs, which is called Special Acquisition Companies. So
that's cool. Hey, cool.
I did.
That's awesome.
The first SPAC I did was $345 million, which at that time was the largest SPAC in history, and did a business amalgamation with Star Bulk Carriers, which is listed on NASDAQ, and I believe they're the largest dry bulk shipping company in the world. And then after that, a year later, I did a SPAC to a company. It was an $800 million SPAC with a company called Vantage Offshore Drilling, which was 4 jack-up drill rigs and 2 drill ships. And then in 2008, I retired and then moved back to Canada.
What year did you get to Goldman?
2005.
Are you familiar with a gentleman named Anton Krell?
No.
Okay.
Do you know which group?
No, I don't actually. He's a retired Goldman guy. He's a trader now. He's got a platform. Really smart guy. I like his
trader. Yeah. See, so I was in the special situations group.
Right.
And the principal finance. So anything to do with trading or capital markets, the way the Chinese walls work within the firm, like you wouldn't know them.
Got
like
it.
Yeah.
Completely separate.
Yeah.
Okay. So you retired in 2008, right in the recession.
Yeah, but I kind of retired before that. Yeah.
That was it. You didn't need money anymore.
Yeah, I just we were living in Singapore, and I wanted to. When I say retired, I thought, I just need to kind of rethink what I want to do in my future. And my kids, the 2 boys, Kevin and Thomas, couldn't speak English, so we wanted, and I didn't. I was a late learner of English, and English is 26 letters. Mathematics, Canadian mathematics, is not as advanced as what kids in Asia learn in mathematics. So they had gone to Asian schools in Japan, in Japanese,
the standard,
and then in Singapore. Yeah, and so, but one thing about Western education is it develops free thinking. So when the oldest one was 13 years old, you're going on 14, it was the right time to put them in the Western education system. So we moved to Vancouver.
Okay. Where's your favorite place you've ever lived? What country is your favorite country to live in? Because Japan would be a good one, right?
Yeah, well, there's a Japanese saying, Mitsugo no tamishi hyakuma demo. And that means the heart of the 3-year-old boy is the soul of the old man. So I will always be Austrian. That's part of my DNA. And so I living in Vienna, I love Austria. I think it's a great country. I feel very comfortable and happy speaking German, eating, the food of my country. But to live, I would say Japan is the best country to live.
Yeah, I knew you were gonna. I figured you were gonna say that.
And it's I would say 3 factors. One, it's very inexpensive to live there compared to Canada. It's much cheaper. Cost of living is way cheaper. 2 is there's no drugs. It's very, very safe.
Yeah, the people.
Kids can ride the subways when they're 5 years old because there's no crime. And the third is the food, right? So Japan has the best Italian food in the world. It has the best French food. It has the best. It's got great Austrian food. It's got the best of everything. The food is so phenomenally incredible. A friend of mine actually has a blog in Japan, and the whole blog is because introducing good restaurants. You know how in Toronto they have like blogs where they'll say, oh, here's a good restaurant, we recommend this.
It's paid for, though.
It's so boring in Japan because every place is good that his blog is finding bad restaurants.
Oh, really? So he does the reverse.
Yeah, and it's kind of funny. It's a funny blog where he's like, oh, found this dirty little restaurant in Shinjuku-san Chome, and it's greasy in the apron. The master has a stain on his apron, and he brings me the food. Damn, it was good. Back to the drawing board type of thing.
Mm-hmm. So Austria has obviously its place in your heart, but Japan would be your number one overall place.
Yeah.
Number two?
So if Japan's number one, Austria would be number two. I love Canada, so I don't want to put any, I love Vancouver. I just think that
it's very Vancouver right now, I gotta tell you.
Yeah, it's
this
foggy,
is like
it's
Vancouver.
rainy,
if there was mountains, you would have thought we were in Vancouver.
Absolutely. But the concern that I have with Canada is that, the drug problem and the homeless problem is just so extreme now. Like in Vancouver, you can't smoke cigarettes, but you can shoot up heroin.
Oh, my wife listens to these, and she's probably just shaking her head right now. Yeah. So.
Yeah, no, it's like, well, you ban, you can get fined for smoking cigarettes, but you can, do cocaine on the sidewalk because it's a disease. And the reality, Japan actually, 20 years ago, when Japan just started having a bit of a drug problem, they said, that's it. So all the gangsters, they arrested them and put them in jail. So if you're caught with marijuana in Japan,
you're done.
It's 2 years. And the way you stop the disease is you stop the sellers, you stop the supply, and you get them into, and so what they did is they cracked down on the sellers, put them all in jail. But in Canada, I'm sure in Toronto, you hear it all the time where people are shot. Yeah. And the news will be known to police.
Right. That's very accurate.
And it's like, well, if he's known to police, why is he known? Put him in jail. Because there's a reason why they're shooting each other. Mm-hmm. And so what you should be doing is putting them in jail and rehabbing them. Right. And, getting them off. And that way you cut the supply down. And instead of having safe, fentanyl, you can slowly take people off those type of drugs. And that's exactly what Japan did.
Yeah, well, it's because I know that you like psychology. You started off with psychology. Sure. Right? I know you left it. But I grew up in a very bad area of Toronto. It's a lot of kids, unfortunately, are born into these circumstances, and they become a product of their environment. Sure. So I understand the jail thing, but teaching them and figuring out the why and getting them interested in something is like just throwing them in jail and you got a 2-year sentence or whatever.
Well, and you rehab them, right? So
there needs to be a system where psychologists or whatever, they have to find interests. I know some really creative people that went to jail, and it's like they were borderline geniuses. I could see it in them.
And in Japan, what they do is when you go to jail, you go through you go into vocational training. Right. And so a lot of the furniture makers in Japan, a lot of the you can go to restaurant, they're trained vocationally, and there's no stigmatism when they get out.
That nobody looks at them any differently?
No.
That's what you're saying?
Yeah.
Yeah.
But it's the system, right?
Because they trust the system and they know they've been
they're rehabilitated. Yeah. Whereas here, again, because the drug issue that we have in Canada is just so extreme, and I get it that labeling, well, it's a disease. I mean, gambling's a disease, alcoholism is a disease. There's many diseases, but we need to. It's proven that it's certainly not getting better here.
Yeah, we shouldn't.
So we need to rethink our strategy.
Yeah, I agree. What about Switzerland?
Switzerland's fine. I mean, to be honest, the reason I wouldn't want to live in Switzerland is that it's landlocked. It's always nice to have water, ocean. Yeah, yeah. And that's a negative on
Vancouver,
on Austria. Is that we don't have ocean. But
I see. Yeah, you're okay with the landlock if you're around ocean.
I'm okay. No, I'm okay with the landlock, only because it's Austria and I was born there. But in general, I like to be in a country that has an ocean.
Got it.
Because I love fishing, right? So, it's nothing like getting out on the water and going crabbing or, going salmon or lingcod fish. Like, I've fished tuna, and like in Japan, we used to go fishing all the time. And
That's awesome. So you met your wife early, eh? Like, how old were you?
well, I got married when I was 27.
Okay, that's not
Yeah.
that young. Okay, so bring me to your first big success in business. You might have already touched on it a little bit, but
I would say like more instead of a transaction, I got very lucky in Shinsei Bank, where we were essentially the pioneers of the MBOs and LBOs in Japan. So we had a desk where we did LBO, which is a leverage buyout, and an MBO, which is a management buyout. So that works very closely with private equity, and 60% of listed companies in Japan are still family-owned businesses that are listed on the exchange. And so, some of the companies, they're listed and they think they've still got a private, company mentality. And so we would approach them and take them private. We'd do a privatization of their asset. And so that was really exciting, right? Be there. And then, some of the deals we did at Goldman, which I can't get into, but, were multi-billion-dollar deals that were, 4-baggers and 5-baggers. And so it was the special situations group at Goldman Sachs. Anyone who works in finance knows that when I was there in 2005, 6, 7, like, it was the biggest moneymaker of any group in the world. And the head of the group, Mark McGoldrick, I mean, his bonus was $75 million US.
wow.
That's how, and it was
That's how valuable.
just a great time to be there. I played when I played college football at UBC, in '86, we won the national championship in Canada. And that's the single greatest, happiest moment of my life.
Sure.
Winning a national championship, because there's nothing above it. But the most satisfactory, or the greatest satisfaction I've had in my life is those, years at GS that really kind of made the foundation of what I am today, as far as my ability to analyze things and do due diligence and put presentations together. So it's not one transaction, it's being part of that team that molds you into what you become when you leave.
That's very well said. I'm going to have to ask you this. So what do you think's happening right now in the world of economics and interest rates, and like, what's your take here? Like, let's just focus on Canada, or Canada and the US, North America, because we're kind of part of that.
Yeah, I mean, I think that, well, first of all, Canada and the US are very different. The US, I mean, to put it in simple terms, Canada, we cut trees, and US uses those trees to make books, and we buy those books at 100 times the cost of the paper that we sent it down. So US is still the most advanced economy in the world, and it's not expanding right now. Like it's I'm not saying it's in a contraction stage, but Canada, so I'll start with Canada. Canada, we are really struggling. So if you actually took like the Trudeau government, and you took the economic growth we have, but you took out immigration as a percentage of our GDP, because
We're negative.
we're negative growth.
Yeah.
And the immigration is basically, it's deceiving, because you're paying for the housing. The construction for the housing, the government is essentially borrowing money to give. So what they're doing is, and this happened in Japan in the 80s, so the government's borrowing money, so our debt under Trudeau has gone way up. We're the fastest growing debt country in the G7. So we're borrowing money, giving it to the immigrants so that they can use that money to buy things. And so it's just a cycle, and that positively affects the GDP, but it's a deceiving statistic.
Because we're not producing more.
We're not the economy itself is not expanding in the way that it should be. So, and Canada is a resource-based, even though we have industries like, Vancouver has a good tech industry and that, but in general, most of Canada, outside of Montreal, Toronto, Vancouver, is manufacturing resource base, and that's mining, forestry, agriculture, and mining has been kind of decimated in the fact that, like, if you look at British Columbia, you have the BC government is trying to understand how to balance, First Nation rights, environmentalists, and the mining side, and so that's going to take a decade to kind of work its way through.
Yeah.
So it's neither good nor bad. It's a fact, and it's going to take time. So Canada's economy is struggling.
Mm-hmm. The stats that they put out, like even recently, last week, are GDP. It's misleading.
It's
you really
very
have
misleading.
to understand what's happening underneath it, right? You can't just look at the main headline and go, "Oh, we grew."
Yeah,
like,
and
wow.
Look, our population grew by 1%.
Yeah.
Right. So, and you're giving,
which is a lot.
That population,
That's a lot.
And you're giving the population, especially the, so I think we accepted 400,000 Ukrainians, and that's great. We accepted, from Afghanistan, Middle East. So we've accepted a lot of refugees, and we're giving them the money to put back. So we're borrowing to give them the money, which affects the GDP.
Right.
So that stat in itself is deceiving. So when it comes to like interest rates, I mean, Canada, the normal Canadian is completely priced out of being able to buy their own home in a major city. It's the people that can afford it are the ones living in the countryside that are actually working on, again, in the resource industry or manufacturing. Mm-hmm. That's where all the money is, where people can actually afford housing.
Yeah.
If you go to Toronto, Vancouver, Montreal, you can be an accountant, a lawyer. To be able to buy your own house is even as a lawyer, is virtually impossible. We've kind of lost the dream in a way.
Yeah, the opportunity.
Yeah,
for our kids. So having said that, and I'm not saying you're a real estate specialist, but you're an intelligent guy. Do you still think home prices can sustain these valuations and go up, or do you think there has to be a significant decrease? Because I follow that market pretty closely.
Well, the thing is that if interest rates go down, I mean, people still want to have a house. So in the cities, and again, and I'm not, for example, there was a big thing there in BC. We have especially in Vancouver, they have the empty home tax.
Right.
And that was basically implemented to say, well, the Chinese are buying the real estate in Vancouver. They're just letting it sit there.
Yeah. And
their purchasing of the real estate in Vancouver is driving up the real estate prices. That's unfair. We need to tax them. I think that's unfair, to be honest. I say that because the reality is people buy homes in Hawaii, people buy homes at Whistler, people buy homes in Las Vegas, Palm Springs, Florida, and they're vacation homes. And those vacation homes, they don't have these empty home taxes because they're viewed as a vacation area. And the reality is that Vancouver is a vacation destination for Asia.
Yeah, that's true.
And so we can't think of it like, hey, we're separate than Whistler or we're separate than Vegas, because the reality is it's a vacation destination. And wealthy people are happy to go there 2 months a year. So rather than, I would say, penalizing them, we should allow them to come in and just accept that as part of the economy.
So so my take on it is the reality is that the federal government and the municipalities and provincial governments have not accurately forecasted the need for housing, So we have this
Correct.
housing shortage. We haven't built as many homes.
Well, and they make it difficult to build. That's another thing, is that
all
getting
the
a
red
building
tape.
permit,
Right.
getting a building permit
And the
is ridiculous.
Yeah, and the prices,
Yeah.
all of the inflationary red tape and the political red tape. So the timelines and the money have pushed up home prices. So now they take it out on everybody. Like recently it was Airbnb. They got smacked. That whole industry got smacked. Why? Because we need homes. Well, yeah, but you didn't friggin' build them. Right? You knew, right?
Exactly.
So that's the whole thing. And now everyone.
And I'm for Airbnb. I think
I know
that's-
it's a great product.
It's
great
young,
service.
that it allows young people to be entrepreneurial.
Right.
You're punishing the wrong people.
That's right.
And I give an example, like in Kamloops, BC versus Vancouver, to build a house. I'm not saying to buy a house, but to build a house, it's twice as much money in Vancouver than it is to build the exact same house in Kamloops. And I looked into this because, I like economics. And so I asked the builder, I said, why is it twice as much to build a house? I get that the land could be worth 3 times more.
Yeah, sure.
But why the building should actually be cheaper, because the containers are at the Port of Vancouver. So you don't even have to transport, your coal sinks and
In
a
a
lot
free
of the
market.
stuff.
Yeah.
So you're closer to the market in Vancouver than you are in Kamloops. So why is it twice as much to build in Vancouver? And it's like, it's the red tape. It's you're getting your permits for your plumbing, getting your permits for your electrical thing, getting your permits for this, and so the cost of housing is not because foreigners are coming in and buying it. It's because we put, that is one of the parts, but a major part is the fact that it's 2 years to get a housing permit in Vancouver. And the engineering that you need to go there. I remember we had a house in Shaughnessy, and
Where's Shaughnessy?
it's a nice area in Vancouver, and
It's a beautiful name. I have a cousin named Shaughnessy.
we had a tree in our front yard. And I brought my chainsaw out to cut the tree down, and the neighbor said, well, you need a permit from Vancouver to cut this tree down. I'm like,
What?
no, it's like, so I reached out to the city hall, and they said, okay, yeah, you're able to cut this tree down because it's not too big that it's protected. But it's the engineering, the reporting and all that is going to cost $25,000.
Right.
So I was like, well, that's
Inflationary.
bullshit. So I just woke up on a Saturday morning and I cut the tree down by myself, bucked it up, had my kids with wheelbarrows loaded onto a Polish friend of mine who wanted the wood for firewood. And we did it. And it was not a big issue. And then the neighbors, because we just moved into Shaughnessy, thought I was actually a gardener. And then they came up to me and said, oh, can you cut our tree down?
That's
Like, how much do you charge? I'm like,
I'll do it for free.
I said, I don't. And then they were like, oh, because no one knows, like, because when I was a kid, I worked, I started working on the drill rigs when I was 15. So my first year, I started working in grade 10, I started working on as a diamond driller helper. And the first year I was like bucking trees. So I had a still 55 and I had a still 45. Chainsaws, yeah, 33-inch blades.
Yeah.
And so I still have my old chainsaw, and I've lit it up, cut the tree down, bucked it up, cut the branches, but in order to cut a tree that's this big, it's $25,000 in
Yeah, it's
Vancouver, and that just shows you how expensive it is to do everything, and it's fundamentally wrong.
Yeah.
That it's that much more expensive in Vancouver than in Kamloops.
Okay, since you're an economics geek like me, where do you see interest rates going? We know you can't predict interest rates, but
Sure.
if you look at data, numbers, and metrics, and understand various things, you'll have your own model.
Yeah.
What do you think?
Well, I think in Canada, it basically it has to go down, and for the reason is that people who borrowed for real, especially for real estate, like 7% mortgage rates is not sustainable for the average Canadian. I mean, if you've got, and remember in Vancouver, $500,000 loan, which is you cannot buy a house in Vancouver for $3 million. So if you've got $1 million loan, your $1 million loan at 7% interest is $70,000 a year. That's, over 6,000. You're basically paying around 6,000, just under 6,000 a month, and that's after taxes, right?
Yeah.
And so your ability to pay your debt down is it's not there.
Yeah.
So the federal government is going to be forced, in order to, save the country from too many defaults. And you're seeing, the rise of distressed real estate assets now. But
the beginning of it, because most of the renewals are up end of this
from
year.
2 years ago, exactly.
Yeah.
So they're starting to come up.
Right.
But it'll really ramp up next year.
Yeah.
The distress, yeah. And so they have to lower interest rates.
And it's so that's why in the real estate game right now, like a lot of people say stay alive to 25, right? So a lot of people that bought properties and didn't put those rates into their model, and there's many reasons why they might not have, they're negative cash flow. So they're trying to kick out tenants to get more fair market rents, but the landlord-tenant board, like, it's almost impossible. So some of these people are already selling off now. They're hanging on for dear life, but they can't get the tenant out because of red tape.
It's the apartments, like, it's the people that own the land. So if you have a house, there's a better chance of being able to sell that because the buyers like property, right? But it's the high rises.
Yeah.
Those are really tough because you not only have your mortgage, you also have your maintenance fees.
Yeah.
And people who went, fixed 5 years ago, they're coming due. They're struggling. Ones that went floating, up until 2 years ago, they're strong. So there's a lot of stress in the market right now.
Yeah.
And income rates are not in line with that. The increases in income are not in line with
So you think, kind of what I'm seeing here is, because look, if you drop rates, it's going to have an impact on inflation, I think. So you think that they sacrifice inflation to help save average Canadians on shelter costs? Is that kind of what you're saying?
Yeah, I actually think when the Fed in the United States, but in Canada, when the central bank, when we cut our interest rates, I don't see inflation increasing.
Well, and I just was going to cut myself off, sorry, because shelter costs is a big part of inflation right now.
Yeah.
So if you cut the costs, you're going to see that go down, and energy prices are down. There is inflation in the labor market.
Yeah.
I have farmers. I live on 10 acres, and a lot of people around me farm. They have 100-acre properties. They might not even do a crop this year, Peter, because of commodity prices. He's like, you know what, Carl?
Oh, your fertilizers and your fuel and
fertilizer a lot due to the Ukraine thing, but it's a weird time. That's why I'm talking about this stuff, because you're super intelligent. I know that, and we're in these really weird times. So it's like, I'm interested to know what you think.
Yeah, look, and agriculture in Canada, I mean, it's unfortunate because that's a lot of our work base. A lot of Canada is agricultural, and we see it in BC as well. Like, the weather is more extreme.
Mm-hmm. And probably going to get worse.
It's going to get worse.
Yeah.
The fertilizers, especially when you go through long periods of drought, the water, you have more metals in the water, and so you actually need to have different types of fertilizers, your crops, and as it gets warmer, the insect issue gets worse.
Yeah.
So, and one of the first deals that I did was a agrochemical company, a Brazilian one, fifth largest in the world, private equity transaction. So I follow I think I have a fairly good understanding with the agricultural sector.
Yeah.
And people aren't motivated. Like, it's really unfortunate, because that will drive inflation, and that's why you're seeing an increase of people eating junk food, because junk food is cheap. Frozen food is cheaper than fresh food.
Yeah, and carbs.
And in the end, it's only the wealthy that are going to be buying the fresh vegetables and the fresh fruits and that, and everything's going to be imported from South America.
Yeah.
we're going to, the Niagara district, they're already showing that like the wine industry is really suffering in BC and Ontario.
Right.
Because
people can't afford it.
Well, in order to be profitable, they have to sell their wine at a price that makes them non-competitive to when you compare them to similar wines out of Chile or South America or even France or Europe, right?
Yeah.
Because producing wine in Canada is more expensive than producing the same wine in Germany or Austria or France or
I bet
Spain.
it goes back to red tape.
It goes back to we also have a bit of a harsher environment. Like,
true, so you can't scale.
You look at Niagara. I mean, the Niagara, yeah, it's on a warmer area, but it still is colder than you'll see in Spain or southern Germany.
That makes a lot of sense. It's not really red tape. It's more environmental.
It's environmental, right? So it's more expensive to produce.
Yeah. Okay. This has been a 45-minute interview so far. I knew it was going to be a long one. And of course, the point of this interview is not really talk about your company, talk about you. But listen, I think we should sort of kind of wrap it up here in the next 5 minutes, and let's just talk about maybe not so much the company, but all of that experience that you've talked about, and why you started or got involved in this company, and how you've taken your experience and your approach into your mining company now.
That's a great question, because I do use a lot of my background. So in 2009 we moved to Canada. I was retired out, and I was are we turning?
No, we're not actually.
And I was approached by Canaccord to look at a company. At that time it was Halder Silver. And
sorry, 2009?
9.
Okay.
2010 I was approached.
Okay.
And so they said, here's a company, and would you consider joining the board based on your background, credentials, and we'd love to have a finance guy like you on the audit committee. So I typically, when I join a board of a company, I always chair the audit committee.
Okay.
And so I joined the board, and I noticed some things that just numerically didn't make sense. And the company ended up going into distress. It was days away from insolvency. So I was an independent director, but put a team, myself and the chairman put together. We raised $7 million, but we did it internally. So, I've put a lot of my own money. The chairman and his family are in for $12 million. I'm in for $5 million. So we've put a lot of our own money into this, rather than, a lot of juniors ask other people to invest. My background's debt, so rather than, if people invest into your company and they make money, one of the problems, if they're friends, so if you have a friend invest in your company and they make money, what happens is that friend will reach out to you and say, hey, what's the next deal? And that relationship becomes more and more transactional based.
Yeah.
But if they lose money, they'll call you up and say, hey, how you doing? Shit, we're down. Like, hey, when's the share price going to go up? And then you feel almost ashamed that you brought them in.
Right, because now they're down.
Because now they're down, and that jeopardizes a relationship. So my philosophy is that until you know you're stable, you put your own money in, and that way you've taken on the risk. So anyway, we put up the money. We took over. I became the CEO. He became the chairman. And I remember, like, mining CEOs would say to me, like, what do you know about running a mining company? And my answer would be, well, what do you know about making money? Because most junior mining companies have never had cash flow. They've never made money.
Right.
And so
they got to go to market all the time.
Yeah, and they're always raising money. And then the other thing I would respond and say, has the CEO of Coca-Cola actually ever made soda pop? Probably no, but they're good leaders. So I said, it doesn't matter. As a leader, you should be agnostic. A person in the tech industry, that's unique. Or if you're in health, like if you're in pharmaceutical, there you really need skills very specific to those industries. But in general, manufacturing, mining, you need to be a good leader and you need to have vision. And so one of the visions that I always understood in banking, and I've seen crashes in 99, 2000, 2001, obviously in 2008, and cash flow is king. So we kind of made the company, we positioned the company to get into cash flow. So we are, last year we generated $7 million of free cash flow. That's a lot of
crappy market.
In a bad market, and that's based on our businesses. So we're a partner with Trans Mountain. We've got a rock quarry. We've got a gravel pit. We're in the process right now of building a cement factory on our site. So the thing is how do we? I'm always thinking, how can we create revenues that are new, and because the mining revenues, like, unless you're mining or unless we're milling, they're not there. So we do have a $30 million mill on our project.
Yeah.
But, again, we're talking about red tape, like, because we enter into milling partnerships, and until mines are producing, we can't enter into the partnerships. And there's so much red tape to get approval. So we really worked hard at getting cash flow in bad markets. So last year was a bad market and we had free cash flow. So to the point where we invested in $1 million into another mining company to help them get into operations. So, I use the skills of understanding cash flow, being creative. Any CEO can take over a new company and say, well, I'm going to augment profitability by laying off people and cutting costs and cutting bonuses. Well, any idiot can do that.
Yeah, you can do that over a weekend if you look at the balance sheet.
But the main thing is, good CEOs create new businesses. And that's, we entered into a partnership with LNSS, which is an affiliate company of the Lower Nicola Indian Band. We've got a rock quarry that helped, remember the flooding that BC had in 2021? So we were very active in the repair of the highways for that with our rock quarry. We're very active with our gravel pit. Now we're going to be very active we start construction of our cement plant next week. So we're very creative, because if you're not creative and you continue to have to go back to the market to fund, the people who funded you the first 3-4 times, they're tapped out and they want exits.
So now you got to go to more egregious financing.
And then you need to find new people. And right now, there's 2 statistics that I'll share that tell you how difficult the mining sector is. So 1.8% of mining companies have any form of cash flow.
1.8%?
Yeah.
Have any
form of cash flow.
Okay.
We're one of that 1.8%.
Yeah. So
most of them, they're just selling the dream of the upside of drilling, and that old philosophy of we'll drill it up and sell it to the big boys doesn't exist anymore. You need to have the mental capacity to take it into production. Doesn't mean you need to, but you need to show that you know how, because otherwise you the big guys are going to lowball you.
Yeah, you lose leverage at the table.
You lose leverage. And then the second thing is 80% of the listed mining companies have less than $70,000 cash.
Say that again.
80% of the listed mining companies have less than $70,000 cash.
Not to put you on the spot, where'd you get that stat from? Is that a broker?
A mining conference.
Okay.
Yeah.
Okay.
The stat, analyst report. So the 1.8%, that was an analyst report from 2 years ago.
I do these sales initiatives, right, to talk with mining companies to do these drives ahead of conferences. This by far was the least successful one I've done. I don't think it's anything because of my company in this drive, in this segment.
Yeah.
It's because of what you just said.
People are broke.
That's right. But they're worried about their salaries and, staying listed and whatever, right? But what I will say is the quality of people, like this interview here in your company, and your intellect, is what I see. So yes, maybe I'm making less money, but the quality is there, and I can't control the fact that all these companies are broke, right? But
and the ones that have money are the ones that belong there, and a lot of their, and to put it in perspective, I would say 3 years ago, M&A opportunities that would come to us would be 2 2 a year.
2 solid ones a year?
No, just
2 a
2,
year.
period. And 2 years ago would be 1 every 2 months. Last year was 1 a month, and now we're getting
In
1 or
meetings?
2 a week.
Oh, wow.
And unfortunately, you know, we're not interested in acquisitions. We believe in our own assets, and one of the problems that you see in mining that drives me crazy is that you'll because I'm a strong believer in synergies.
Mm-hmm.
So you'll see a junior mining company that will have a lithium asset in Quebec, a copper asset in Peru, a gold asset in the Yukon, and there's absolutely no way to extract any synergy in that company.
Yeah.
They're all completely separate, but they buy them because years ago they would be able to promote that and then, you know, raise money and then do some drilling. But the reality is that if you don't have, so like we would never look at any form of acquisition or investment that's not in British Columbia, because that's where our mill is, that's where our processing facility is, that's where our site is, and then we can have our same geologist drive there.
Yeah.
But when you start doing, you know, different languages, and I'm multilingual, right? But
your people aren't, your staff.
But even then, like, you're dealing with legal documentation in Chile or Peru in Spanish and that, like, you have no synergies. It's great if you're a major miner, because they run those as separate companies under an umbrella.
Right.
But if you're a junior, I mean, just stick to your asset. You either believe in it or you don't. They have to be synergistic. Otherwise, there's a lot of wasted capital, and you're not going to be. Sooner or later, you're going to run out of the ability to raise money. And a lot of the groups that are approaching us are just exactly what I said. They've got assets in different jurisdictions, different types of metals. Mm-hmm. You know, if you're a gold specialist, that doesn't make you a copper specialist, even though you're a geologist.
Yeah.
You know, if you're an investment banker, that doesn't make you smart when it comes to buying equities. That's what traders and you know, fund people are like the research side of the investment bank. It's like people always ask me, like, hey, what's a good stock to buy? Mm-hmm. My background's distressed debt. So I'm like, well, I can tell you what bad companies look like, but you know, I'm
really
not,
quick.
I don't pretend to be an equity specialist. But that's the norm of the junior mining sector. And those companies are really struggling right now.
Yeah, they are. Absolutely. We're basically at an hour. I was really looking forward to this one. Shout out to Bill. Thanks for setting this up and sending me all the information on the company and this gentleman here. You know what? I'm going to be asking you to do interviews because I really like your mind, and I think people need to hear it. I look forward to the webinar that Ashley will be doing with you about the company.
Sure.
And a deep dive and an overview. I think that's going to be fascinating to know more about your projects and what you have going on. And you know.
And they're really exciting. Like again, you know, as a former distressed debt guy, mm-hmm. you don't brag about your transactions because they're typically distressed, right? That's right. You talk about the exit, but we're in a really good position, and it's going to be a very exciting year.
Yeah. So go in the description to get the registration link for the webinar and join. And you know, I'm sure you'll take calls or emails, or you have people that will.
Sure.
But yeah, we look forward to it. Thanks.
Awesome. Thanks, buddy.
All right.